Are you ready for the most turbulent trading week of the year?
Absolutely. Experts like Joseph Wang, Jeff Snider, Matt Piepenburg, and Craig Hemke will share their crucial insights today.
We've compressed their invaluable analysis into quick, digestible takeaways that save you time and keep you informed. So, let's dive in. Joseph Wang will kick things off by exploring the potential impacts of recent policies on the S&P 500.
Stay tuned. You won't want to miss these expert predictions and strategies to navigate this uncertain landscape.
Welcome to Markets Weekly with Joseph Wang, where we analyze the weekly market trends and overarching economic policies.
Joseph Wang brings insights from his extensive knowledge of financial markets and recent economic changes.
Joseph Wang notes that the S&P 500 reached all-time highs, reflecting market optimism within the first week of the Trump administration.
This positive market response ties closely with Trump's strategic executive orders aimed at stimulating growth.
Joseph observed President Trump's executive orders regarding tariffs, particularly targeting Canada, Mexico, and China, as a reflection of his trade policy.
He believes this cautious approach may be necessary to encourage domestic production while avoiding trade wars.
Joseph highlights Trump's focus on easing regulations to attract businesses and investment into the U.S.
This regulatory relief aims to foster an environment conducive to faster business growth.
According to Joseph, the Trump administration is actively seeking foreign investment with promises of a more business-friendly environment.
This effort includes high-profile meetings with investors from around the world.
Joseph Wang discusses the administration's move towards increasing domestic energy production, including fossil fuels.
By withdrawing from the Paris Climate Accord, Trump is positioned to make energy prices more competitive.
Joseph predicts that if regulations are effectively reduced, the United States could experience significant economic growth.
This growth could set a trend of job creation and increased investor confidence.
Joseph warns that actions prompting retaliatory tariffs could complicate trade relations, impacting markets.
He notes that this could lead to increased volatility in market reactions as changes unfold.
Joseph advises closely watching regulatory changes as they can greatly influence business operations and growth.
Fast adaptations by businesses could signal positive market moves.
Finally, Joseph emphasizes the importance of trade negotiations in the coming weeks as they will shape market stability.
Strategic movements in trade policies will be crucial for investors.
Today, we're reviewing insights from Jeff Snider at Eurodollar University on the current states of the global banking system.
Jeff's expertise provides a deep understanding of how changes in monetary policy impact banks and economies worldwide.
He discusses how banks are becoming increasingly defensive amidst economic recovery talks.
Indeed, his analysis sheds light on the reluctance of banks to lend, opting instead to accumulate treasuries.
Jeff Snider highlights that banks are buying record quantities of U.S. treasuries rather than lending to the economy.
This defensive behavior reveals a lack of confidence in a recovering economy.
What does Jeff say about the optimism in the market conditions?
He argues that the banking sector remains skeptical, signaling deeper issues beyond the surface optimism.
How does Jeff explain the surge in dealer holdings of U.S. treasuries?
He notes that banks are ramping up their treasuries as a hedge against potential financial disruptions.
Jeff points to dollar funding issues as evidence of a fragile banking environment.
What does this mean for the global economy?
It indicates a broader instability that could impact global trade and financing.
What are Jeff's predictions if banks continue this defensive posture?
He warns that persistent risk aversion may hinder economic growth and recovery.
Is there any concern about the dollar's stability, according to Jeff?
Yes, he suggests that ongoing dollar scarcity may alter its global standing.
Jeff emphasizes that for real recovery to occur, banks must reconsider their lending approaches.
Lending to the real economy rather than hoarding assets is crucial.
What should investors watch for in the current climate?
Investors are advised to look for opportunities in safe haven assets as banks pivot towards stability.
Today, we're reviewing insights from Matt Piepenburg, a managing partner at Matterhorn Monetary Policies.
Matt has been pivotal in analyzing the financial landscape, particularly through the lens suggests a need for caution.
He's known for his deep understanding of economic cycles and how they impact investment. in full.
Let's explore some of his key perspectives from today's discussion with David Lin.
Matt expresses caution regarding the overvaluation of markets driven by recent monetary policies.
He highlights that while last year's bullish sentiments were prevalent, current indicators suggest a need for caution.
With changing economic signals, the shift from risk-on to risk-off sentiment is notable.
This transition is influenced by a growing skepticism around sustainable market growth.
Matt expresses caution regarding the overvaluation of markets driven by recent monetary policies.
He highlights that while last year's bullish sentiments were prevalent, current indicators suggest a need for caution.
With changing economic signals, the shift from risk-on to risk-off sentiment is notable.
This transition is influenced by a growing skepticism around sustainable market growth.
What does Matt note about the relationship between strong labor markets and market performance?
Matt points out that traditionally strong labor signals would be bullish. However, now they could indicate less dovish policies from the Fed, which could spook markets.
How does Matt view valuations in relation to key market indicators?
He explains that classical indicators like the Buffett indicator show signs of overvaluation, suggesting potential market corrections are imminent.
What insights does Matt provide about the central bank's influence on the markets?
Matt emphasizes the Fed's paramount role in dictating market sentiment and how their decisions greatly impact investor behaviors.
What does Matt forecast regarding major market corrections?
Matt predicts that the market may face a significant correction as economic conditions evolve and investor confidence wanes.
How does Matt see the investment landscape shaping up for 2025?
He advises being cautious in investment decisions, suggesting 2025 may pose several challenges that require strategic foresight.
Matt recommends investors focus on hard assets like gold as a hedge against market volatility.
He underscores the importance of hard assets in protecting wealth amidst economic uncertainty.
What final advice does Matt offer to investors?
Prepare for potential market volatility and adjust portfolios accordingly, keeping a close watch on central bank policies.
Welcome back. Today, we'll analyze the latest market trends with insights from Craig Hemke, the director of the Technical Traders.
Craig has a wealth of experience in analyzing market movements, particularly in the technology sector.
Craig's expertise allows him to provide valuable perspectives on how technology stocks are reacting to recent news.
Let's dive into his insights about the tech wipeout driven by China's DeepSeek AI.
Craig highlights that the introduction of DeepSeek AI has caused a significant panic in the tech sector.
This new AI technology, being cheaper and more efficient, is posing a threat to established players like NVDA.
According to Craig, we're seeing bonds rally as investors flee to safety amidst the tech sell-off.
This trend reflects a shift in investor sentiment from high-risk assets to safer investments.
How severe is the reaction to the launch of DeepSeek AI?
Craig notes that NVIDIA faced a substantial drop, nearly 15%, indicating a wave of panic selling in tech.
What role do geopolitical issues play in this instability?
Craig points to Trump's tariff actions that are rattling markets, contributing to the volatility, particularly in the tech sector.
It looks like investors are reacting by moving into defensive stocks.
Exactly, as Craig explains, sectors like consumer staples, healthcare, and real estate are seeing a rise while tech takes a hit.
What are Craig's thoughts on a possible market recovery?
Craig mentions that as the market sees significant dips, bargain hunters are likely to step in, looking for undervalued stocks.
And what about the future outlook for the tech sector?
Craig warns that volatility will continue, driven by external pressures like geopolitical tensions and news-driven selling.
Craig suggests that investors should monitor tech stocks closely for potential buying opportunities during this volatility.
Looking for rebounds after significant drops can be a strategic move.
Should investors brace for further turbulence?
Absolutely, Craig emphasizes that being prepared for continued shifts in the market is crucial for navigating these uncertain times.
Today, we're breaking down the strategic insights provided by Matt DeWolf, the host of Trade Brigade, regarding this upcoming busy trading week.
Matt emphasizes the importance of monitoring key economic indicators as we head into this crucial period.
His strategic analysis covers several pivotal aspects of the market's current state and upcoming events.
Exactly. Let's dive into what Matt has outlined for navigating this potentially volatile week.
Matt underlines that big tech earnings are expected to impact market direction significantly.
He believes that companies like Microsoft and Apple will play critical roles in shaping trader sentiment.
The Federal Open Market Committee, FOMC, meeting is also highlighted as a key event that could stir market dynamics.
According to Matt, traders need to prepare for potential shifts in monetary policy depending on the tone set by Jerome Powell.
Matt expresses a generally bullish sentiment as traders approach earnings season, especially with tech stocks.
He indicates that if earnings meet or exceed expectations, the market could trend upward.
Additionally, Matt mentions that volatility is currently mispriced, suggesting that traders should brace for potential surprises.
This mispricing could lead to sudden market movements, particularly following the FOMC meeting.
Furthermore, he discusses which sectors are showing more strength, particularly tech and financials.
He notes that financials have been performing well, which could support bullish tech trends if earnings are strong.
What does Matt predict if the big tech earnings come in positive?
He suggests a rally could occur, driving indices higher if expectations are met or exceeded.
Can we expect volatility to rise leading up to the FOMC meeting?
Yes, Matt expects significant swings in price around that event as traders react to the Fed statements.
To wrap up, Matt advises traders to stay informed about key economic indicators as they navigate this trading week.
Monitoring tech earnings and Powell's remarks will be crucial.
Additionally, he suggests that traders may want to adjust their strategies based on overall market sentiment.
Flexibility will be key as new information unfolds.
Wow, what an insightful roundup we've had.
Indeed, each guest brought such valuable perspectives on navigating today's financial landscape.
I found it particularly fascinating how everyone agreed on the importance of caution in our investment strategies.
Absolutely. But there were some intriguing disagreements too, especially about the role of precious metals.
Right. Craig seems quite bullish on metals, while Matt Piepenburg suggests a more diversified approach.
And let's not forget the varying timelines on market shifts. Jeff believes it's a longer process than Joseph anticipates.
These contrasting views really make you think about how to position your portfolio.
Exactly. If this discussion sparked your interest or gave you something to ponder, please like and subscribe to our channel.
Help us bring you more insightful analyses from leading experts.
Stay tuned as we dive into more financial insights that you won't want to miss.
Thanks for watching, and we'll see you next time.